Welcome to the Limit Up Weekly Capital Market Podcast. My name is Don Collins. I'm a chartered accountant and business advisor of over 30 years and partner at Findex, a leading financial advisor and accounting services firm based in Australia and New Zealand. I'm with Ian Reynolds, trader and investor, former bank foreign exchange market maker, early investor and Bitcoin and tech founder. Today we're going to go through what happened in the last week, where we found the Fed cut interest rates by 25 basis points. The Bank of China cut rates also by 25 basis points. Bank of Japan held the rates, and ECB also held its rates. We'll talk about credit, the US banking system liquidity, and also the US K-shaped economy.
Sounds good. Where do you want to start?
Where would you like to start, Ian?
Yeah, so obviously it was central bank week last week. Fed first off the blocks, 25 basis point cut, but a very hawkish press conference by Mr. Powell. The market is assuming there is going to be significant rate cuts, but he doesn't seem to agree with the markets,
right,
which will make him wrong as usual.
Yes.
But there is considerable disagreement within the Fed for once. Some want to not cut rates, some want to cut rates more, but really everything is being driven by the Treasury now. You might as well say the Fed is the Treasury.
Right, okay.
Which is very bad for bond markets.
Okay.
With Canada, 25 basis points as well. Actually, they did technically go first, but no one really cared. Canada's in a lot of trouble, economy tanking, and now inflation picking up.
Right, okay.
Bank of Japan, that was more interesting. They don't really know what to do because their rates are way too low.
Yep.
So they're just letting them rise, which would seem to be okay. But unfortunately, their currency is weakening, as we'll go through later with it.
Yes.
So with your currency weakening and your rates going up,
yes,
it's got to stop somewhere.
It obviously does.
And typically of countries that are very indebted, that's what happens.
Right, okay.
And they are the most indebted country in the world.
Which can't be a good thing to have.
Yeah. And the ECB, they didn't do anything. Wasn't really expecting them to do anything. Their economy isn't too great, but it's stable. CPI is 2.3%, 2.4%.
Yes.
So not so bad and stuck there. So basically nothing really happening there.
Right, okay.
Most of the talk in the markets this week has been about cracks in credit, subprime lenders going bankrupt, delinquencies in pretty much everything.
Yes.
Kind of two-tier economy as we've been experiencing. Lots of talk on Friday about the US banking liquidity as banks drew down $50 billion from the repurchase agreement facility at the Fed. What does that mean? Well, it means they can get it cheaper than they can through the interbank market, so why wouldn't they?
Yep.
If you look at the chart, it's nothing compared to what happened before the GFC.
Okay.
But that's not saying it can't become like that.
Yes.
Because it wasn't like this and it hasn't been like this since COVID.
Right, okay.
We'll talk about that and the K-shaped economy, as you mentioned, where those with assets are doing very well, those without assets are doing very, very badly.
Yes.
And there's nobody in between as middle class that's being stripped out.
Right, you're either one or the other. And is it just the one economy?
You don't get a choice, though.
You don't get it. Of course you don't. No.
Yeah, so mainly the US, but really it's everywhere, even here in Australia.
Yep.
And it's just the way it is. You can't print up all that money and give it to people with assets without this happening.
Right.
And you got to put the genie back in the bottle.
Okay. So there's a lot of extreme noise or news there. It'll be great to then see how this is reflected in the charts of the last week.
Yeah, so I don't necessarily think that always reflects in the charts.
Yes.
Because scandal and scuttlebutt and conspiracy theories and economics are not financial markets. Sure. So let's have a look anyway.
Okay, let's go.
All right.
What's up first?
Well, why don't we take a look at our old friend gold? Here we go. So here we are. This is gold daily. As we know from last week, big drawdown as the London bullion market came in and hammered it. Bit of a pause for what we call a bear flag there, and then another drawdown. Bounced a bit. I think it's going to go down again. If we can get down to 3,500, which was the break up from here, which is there off the chart though. It was this point here. You saw the 3-month consolidation.
Yep.
The break up, the big blow off top.
Okay.
And now bullion market forcing it down. But this isn't really a blow off top because it's nowhere near spectacular enough. So there's more to come.
In which direction? Sorry.
Well, it will go up significantly, I suspect, at some stage.
Yep.
And then something really big is going to happen, and we'll have to see what that is.
Okay.
Silver's looking better. As you can see, it's bounced. This is a line I drew many months ago, which is kind of like the balancing point of the market, right? And it tagged it exactly. So that was lucky.
Would it be luck, or is it your history of advising in the market?
Oh, you got to say it's a bit of both.
Okay.
To be honest, because it's just a line.
Okay.
But yes, so we've had a good bounce, and it's looking a lot better than gold. Still a big shortage in the marketplace. I think we will see. I mean, we are on nearly $49. This is the treble high,
right?
$50. So we've only seen the blow off up to $54.
Yep.
Which is 8% higher, which is significant, but in a couple of days.
Okay.
So there's more to come there.
And so it will follow a similar trend to gold.
I think they go together.
Yep.
Probably silver leading it.
Yep.
And inverse to Bitcoin, which is every time gold and silver go up, it goes down. Yeah. Having said that, it just goes down at the moment.
Yep.
So no one's interested in Bitcoin at all, but it's still 107,000. So, we'll have to see where that goes.
Yep.
Currency is beginning to get interesting. If we look at the Dixie, which is the US dollar as a futures contract against euro, yen, sterling, the other currencies, and just a way of measuring it all in one rather having to reassess it separately against each of those currencies.
Yep.
You can see that the trend for 20 years or so here, which is between, let's give us some numbers, 96 and 114 back off the screen. So a really big range, 20% range for the US dollar. It's collapsed down into this and hasn't gone through it. A lot of hedge funds, for example, are short of the dollar.
Yep.
But it's not going down. It's had got a nice bounce. Fed cutting rates has pushed it up, contrary to normal economic theory.
Yep.
Because actually it's a pivot to de-dollarization, and that'll get me in trouble because it's a moot point what de-dollarization even is.
Okay.
But you can quite clearly see when the Fed cuts,
it goes up.
Dollar goes up.
Yes.
So we really need it to break this point here, which is sort of just under 100, and this point here, which is like 101, so pretty so we can get a really much bigger trend happening, at which point it could go up to 114 again or higher. That's would be a big secular trend when it gets into it.
Yep.
Dollar yen, which we got recently, quite surprising really because it's been really messy, and these charts are exact despite the fact that it looks like it's broken out. It hasn't confirmed above, but when it has gone through, it's carried on.
Yep.
And so when we get up here, 157, 158, this is where the Bank of Japan may think about intervening.
Sure.
But currently, they seem to be letting it go. They're letting rates go higher and letting the currency going lower. So
right.
If that's what they're intending, that's good because they're letting rates find their own level.
Yep.
I suspect it's not.
Okay.
And that they can't really do anything.
Yes.
Because normal foreign exchange intervention never works.
Yes.
Unless it's like the Plaza Accord or something really, really big.
Yep.
So you're just kind of telling the market to keep doing it to some extent.
Yeah. Give them signals and direction. And
exactly. So they'd be much better off talking about it rather than doing it.
Yes.
So that's all going nicely.
Okay.
Stock markets, as ever, going up. This is the NASDAQ where we're at 23,724 as of the close on Friday. As you can see, it's drifting up. Bit more context there. At a new high.
Yep.
Every day it opens higher and falls away, but ends up higher.
Oh, right.
So the momentum is there in the background, and the assumption is that the Fed at least is going to print money.
Yep.
Which it started doing.
Okay.
And normally, stock markets would be 6 months, let's say, after the Fed starts cutting seriously, will be the point at which the cuts have now telling the market it's way more serious.
Yes. Then what at first?
Than the euphoria they've had of cheaper money.
Yes. Okay.
So there's a tipping point at some stage where it gets serious.
Yep.
And quite clearly, we're not there yet.
No.
I mean, if you look at the Nikkei 225, which for 40 years was less than 48,000, I think it was. I can remember it when I used to work in London being at that high.
Right.
It's only recently broken there, like in the last 2 weeks. And then it's gone up another 4,000. So here's your currency weakening and your stock market going up and your rates going up, which we talked about just now.
Yes. There we go.
If you want to have a look at Japanese rates, because looking at rates, it's way more complex than simple things like stocks, because there's lots of considerations and structural pieces in there. But if you look at Japanese 10-year rates, it's only going one way.
Yep.
And that's because these were negative.
Right. Yes.
And it's only 1.9. It's only 1.7 at the most.
Yes.
Now, so way too low.
Excellent. Thanks for those updates.
Yeah, no worries. That's all I've got on the charts this week.
Okay. So in the next week, what will be coming up?
Well, everyone's favourite central bank, Tuesday, tomorrow.
Melbourne Cup.
The RBA.
Yeah, the Melbourne Cup interest rate release.
Yeah, I think that the RBA will be there having a few champagnes in case they've got no job to go back to.
Sure.
Yeah, so I've got that tomorrow. Bank of England on Thursday. I don't think they're going to do anything. All the market is focused on is what's going on at the Fed.
Yes.
Has the Treasury taken over? Is there any banking crisis to look at, which I don't think there is.
Okay.
But all internal, but the ramifications of a closet takeover of the Fed by the Treasury, really bad news for capital markets.
Okay.
But until it is, it's not.
All right. Okay. Well, thanks for that, and look forward to those updates next week. And for those subscribing, look forward to catching up next week as well. Thanks again for listening to the Limit Up podcast.
Thanks, Phil.
Thank
Good
you.
to see you.